And so I think there's basically three reasons why the Bitcoin halving is quote unquote not priced in. Is one, I think if people are trying to price in the Bitcoin halving, meaning like bid up the price today, if say the price of Bitcoin is $1 million today, that's going to be a ton of hash rate, a ton of mining investment that's going to have to come online. And markets are relatively efficient, right? So if the cost to produce a Bitcoin is, $20,000 or $10,000, and price of Bitcoin is $1 million, that's going to be so much gigawatts, so many exahash of hash rate that's going to come online. As that hash rate comes online, those miners are going to at least be selling likely to cover their operating expenses. And so as more and more hash rate comes online, that sell pressure in dollar terms drastically increases. And so it kind of gets to a point where it's like, okay, if Bitcoin's trading at $1 million, that's like billions and billions, maybe even like $1 trillion per year of sell pressure, which would just be insane. And that would require a lot of people buying Bitcoin like over and over again just this year or early next year. So that's one reason why I think halvings are priced in. The second reason I think is when the halvings do occur, and Blockware did really great research on this back before the 2020 halving, miners, the weakest miners on the network are the ones that get purged from the halving, right? So the miners that are running at high electricity rates or running old generation machines, those are the miners that end up turning off. And those are the miners that are actually selling the most Bitcoin right now. If you're running the latest and greatest hardware and you're operating at some of the lowest energy rates in the world, you're mining a lot of Bitcoin and you're not selling much Bitcoin. The inefficient miners, the ones that are running those old gen machines at a very high electricity rate, those are the ones that get knocked off the network. They capitulate, and then the only miners left after the halving are the ones that have very low expenses and they sell little Bitcoin. So that's the second reason why I don't think the halvings are priced in. And then three is people think Bitcoin is insecure long term, right? So after each halving, eventually the block subsidy is going to trend towards zero. Some people say, hey, well, Bitcoin simply won't be secure when that's the case. And so after each halving, when Bitcoin simply doesn't die and the price doesn't go to zero, and people can continue transacting and they're comfortable, settling Bitcoin transactions after 6 confirmations or 10 confirmations or whatever it might be, the fact that it doesn't die proves those people wrong, and therefore, they may want to buy some Bitcoin. So I think those, in my opinion, are like 3 reasons why Bitcoin halvings are not priced in.